Hey everyone, welcome to the Market Internal Review for September 18th, 2023. Gonna blast through this one here. We had a small gap, about 32 cents to start the day here on SPY, and we had a roughly balanced market towards the beginning of the day. Look over here, and ad was almost right at the 0 point to start the day. We did start to drop off, hit the common moving average here of the 20 SMA, slightly above the 200, and that's where we kind of see that bounce to start the morning session into the lunch slump, as I often call it. One of the key indicators I was watching for somewhat of a directional bias is the volume here for the New York Stock Exchange, and you'll notice that while the price advancement of New York was rising towards the zero line, the volume wasn't really following suit, and we basically had much of a downtrend. It was flat somewhat throughout, I don't know, first 2/3 of the day, but downtrending all the same. And then really at the end of the day is where we saw that more aggressive down move. Still, overall, the whole day was watching paint dry. The open to the low was about a 48-cent move. Open to the high was not quite $2, and over the course of the day, open to close was 59 cents. I mean, that's effectively nothing. We had strong trend indication of an imbalance, so that does give us room to run, following typical strategy. However, you'll notice if you've got MIT plotted, we're looking at the price and volume of the New York market, and it's red, signifying bearishness, but the trends themselves are bullish with these upwards pointing green arrows, but it's real choppy. We've got red and green mixed all over the place, and just not really much follow through. We had some strong tick once we got through kind of this gap indecision session here, and these high ticks, not quite 800 here, but the past couple days this has been strong enough. And you'll notice in the price action is just unbearable for trading. We have a little bit of like a broadening kind of formation. It looks like a megaphone on the charts, and just real nasty. And this is on a 2-minute chart. I mean, this isn't really tradable by any stretch of the imagination for options, or, I mean, unless you like sitting through periods of red and you've got wide stop losses on an otherwise choppy session. I mean, this price structure doesn't really give me any kind of confidence for a directional bias. So watching the price starting to ascend towards the zero line, the one kind of setup I looked for was a gap bounce test into previous session TWAP here, and it delivered, but I mean, just really noisy. It's about a $1.30 move, but a lot of the standard kind of TWAP setups, if you tried those, we had one break and retest entry here. It would have stopped out on TWAP. We do a nice 180 kind of reversal here, and we do another break and retest. And sadly, we had another close over TWAP, and then this break and retest was kind of real loose. I like to see it break back below and then back above without touching TWAP. We didn't really get that before we kind of went for it right over. But maybe some good entries that way, but just nothing really worth trading, at least for the morning session. I did call out on X that I was kind of looking for an end of the day fade setup, and that's typically just where I look for a breakdown of the first standard deviation high after we've had, I'm not gonna say this is a good move, but this, I guess, from the lows was 230. That isn't terrible. It's just the delivery was nasty. But I look for a break and retest back down to that first standard deviation, and then I'll try to target TWAP And if the range and the price action and the MIT internal display down here kind of gives me the confidence, I'll even look for a complete mean reversion. So we did actually have that. So this would be the first break in test, and then I like to use either a TWAP level or previous TWAP level or some anchorage point that makes sense and somewhat fits the risk that I'm seeing down here. This one here, I think, depending on how you like to use it, if you like to enter at the swing high, as people call it, or just the relative recent high, you could either use that or that. If you use this one, I like to look for closes above or below my stop. This one technically, maybe some people will call it a loss, but we did not close over it. So keep that in mind, that probably would have kept me in. And then targeting TWAP, we basically I'm looking for a breakdown of previous session TWAP here, and we did get that. Pretty decent move back down. The move down was decently clean, kind of like this move up was all right. Even if you did stop out there, you got another entry here or here. I mean, lots of different things. And I called it out on X. So I'm looking for it. I saw this and I thought that they were just the market was going to continue to find buyers or maybe just chop sideways for the rest of the day. So I was surprised that I held it for, I felt like forever, and we finally did get that sell. And you'll notice if you're not using the gap zones indicator or something similar, you don't have to use my stuff, but we wicked the daily gap midpoint. So as I mentioned in another video, even these really small gaps, I mean, you wouldn't think a 32-cent gap on SPY would provide any kind of alpha of any kind, but you see all these wicks here. These wick lows are right on this gap. Even the body open here is right on the top of the gap. There's a significant portion of the market that has to be using these, and so that gap zone mid wick there is also the very bottom essentially of the lower first standard deviation, and TWAP is right where that wick tip is. So very good signal for me to exit. It's also the strongest bear tick that we had all day. So that was another reason for me to go ahead and get out. And Mercy was showing that potentially we were looking at an oversold condition. And sure enough, we bounce and chop around. And then look, we've got all this consolidation right here, daily gap mid, and bought it all the way back up. And look where that wick ended us, right at TWAP. So just kind of an interesting day. We're chopping a lot, I believe, because we've got the FOMC rate hike announcement on Wednesday. So I'll maybe post a chart up there. Going over real fast to look at the New York Composite. We oscillated around August TWAP and current TWAP. They're real close together now. It was also unironically previous day low for the New York Composite. And this old daily gap zone I've got here, we're basically just riding that wave the whole day. We didn't really make any progress whatsoever. You'll see the open is effectively right where the close was. So, I mean, a literal nothing burger, as people say sometimes. As far as the monthly TWAP for the main indices, SPY broke into first standard deviation low in the month and gave it all back. So nothing much to say there. Qs, same kind of thing, only they didn't even get to break up into that first standard deviation low. And they spent probably 50% of today's market trading session in the daily gap. They really struggled to stay out of it with any kind of force whatsoever. Chopping between the monthly TWAP standard deviation low, the first one, and some previous August monthly TWAP levels that are plotted on September's price action. I mean, honestly, just really beautiful price action right around that level there. You see all the consolidation, the fake breaks, and the wicks and the bodies. These hit so well. Even this lower one here, I mean, It's really ridiculous how accurate those levels are. But yeah, no real strength whatsoever for Qs. The Dow had me somewhat hopeful midday when I saw us reclaim on SPY previous session TWAP that maybe we were seeing more buyers step up, if nothing else, just to fake out some buyers before FOMC. Right when Dow was appearing to claim the monthly TWAP, and they still, we sold that back down. But the one thing I'll say is Dow continues to impress me. They're certainly the stronger index right now. They did fill their August to September gap and even broke above for a little bit last week. They did sell it off, come back all the way, and then today we bounced the first standard deviation low on the month. But I don't know. It's still bearish. We did not come into highs from last Friday, and while we basically closed where we opened, kind of like the other indices, we didn't really break into any kind of significant structure here. This is really loose price action interpretation, but we've got this strong kind of TWAP rejection here and an engulf. That whole price area of 347.5 to, we can just even call it 347, but we didn't even come close to that. That would have been mid of Friday's range. So pretty bearish there still. And as far as the Russ was a little surprising. We kind of held out in the first standard deviation low, and we tried to break back in, but then just more rejection. So pretty weak on the advanced decline overall for the whole day. Couple squeezes, one did something, one didn't, and just more significant downside when we barely touched any of this structure here at all. We didn't even come close to the mid of Friday's range. So heading into tomorrow, Tuesdays a lot of times will provide a move. Where in this case, I really don't know. I don't really have a good assessment on where things could go from here. I think FOMC is going to provide a surprise no matter what, whether it's a rate hike or a pause, and then the market's just going to do something dumb with whatever Jerome Powell says. As far as the daily goes on SPY and just kind of this chart that I've been presenting, we're resting right on this weekly trend. We didn't even come close to 50% of this candle, which would be roughly around 445. We're below the 20, below the 10, below the 50. I mean, we're just below all the key moving averages from the daily time frame. So still bearish there. We had that hard rejection from last week at the 450, which is kind of like a psych level. Whole numbers are kind of a big deal there. So I don't know. Again, across the board, pretty much just bearish. I think obviously anything can change. I'm going to just be watching for pops, looking at market internals data, and I'll play the trends how I see them intraday, but overall I think I'm going to look for more short side sentiment until I start seeing some significant reversal structure and definitely more monthly TWAP reclaims across the indices. To end the day, we didn't even really have significant volume. If you didn't catch it earlier, we didn't break. We broke into the bear, strong sell volume zone, but not like what we had the other day. So nothing really there to write home about as far as I'm concerned. And then the advanced decline was also pretty weak. So I'm not even really expecting much of a gap or anything. VIX is at 14, but that's pretty much nothing. Heading in tomorrow with fresh perspective, just keeping an eye on that higher time frame data analysis with the TWAPs on the monthly. And yeah, that's pretty much what I've got. Hope you enjoyed. Feel free to leave a comment. Thanks for watching. Happy trading.